in that.
You know, the Fed is going to have trouble with an exit strategy. I'm trying to figure out your exit strategy in terms of you had Bank of America, you had Wells, now you're friendly towards equities. How long do you stay at the party? How long will you stay at Bank of America and Wells?
Well, we're not that big in financials right now. I think they're probably about the equities you're speaking of. Yeah. They're about 10% of our portfolio.
How much at your biggest point was it? More than 10%.
More than 10%.
Was it 90%?
No. We owned a lot, as I told you, we owned a lot of bonds and preferreds, and the preferreds got converted into equities.
Okay.
So, I don't know, in the equities of financials, maybe we're at 20% or higher.
So you're not crazy about them now?
I don't hate them. I just think they're as good as they're as good as anything else in the market.
In the stock market. All right.
They're fine.
How much can we still be in a secular bear market in the stock market, and it can go up enough to give you another 40% return this year?
Can you be in a secular bear market? Well, if the Fed starts moving, I don't know what you mean in the stock market versus the economy.
Because it's already been 11 years that we've made no headway. Do we ever make any headway again in the averages? The S&P
of course.
Really? How long from? Will it be 5 years?
Joe, you may not be living because I just heard you're pretty old. I mean, I don't know.
I'm trying to stay healthy.
Well, that's good. That's good.
Yeah.
Look, you know, for people watching the show, I mean, you have to know that the market's going to go up. Well, I think that the market will probably go up some way or another in the near term. Okay? In the longer term, you know, that we'll have our cycles. Is it going to be a secular bear market? I think look where we are right now. Okay? Next year, if you believe the estimates, I don't know where we are exactly at this moment, but I think on the estimates on the Bloomberg, you're allowed to say Bloomberg on this TV? Is that like shit soup?
You are. Okay. As long as you're talking about the mayor.
Okay, the mayor, okay.
What's he estimating?
What's he estimating? Well, I think the S&P, you're trading at like just under 12 times for next year. You got 2.5% 10-year. I don't know where it is on the screen today, but and let's say that the market does get better on its own. It's not going to get too much above 3%. Okay, where should multiples be if you're at a 3% 10-year? Not 11, 12. Right. Should you be at 14? No. But can you get to 14 and still be kind of really conservative? Can the market be like still kind of shaky at 14? Absolutely. Abso-frickin-lutely.
Really?
Is that okay to say? Absolutely.
That's okay.
Well, that's okay. That was okay.
We have a lot.
I got to get the list of things okay to say.
We talk with natural gas fragging a lot.
Fragging.
So if you want to use fracking.
Well, that sounds a lot worse, though.
It does. It does. So, okay, so what is reasonable? Where do you think multiples should be? So somewhere above 12 but below 14?
Well, look, I mean, you have to tell me what you think's going to happen. Okay, I think right now where we are, they're probably low because we're set up for a situation where the market's not going to be that bad and the economy's probably not going to be that bad. And Carl's going to spend a lot of money if he has a 4% mortgage.
And twins.
So. Well, twins makes him spend money no matter what he does. So he can't help himself.
Married, there's that.
Right.
Yeah. Oh, that's your fault. I didn't do that to you. I love being married, by the way, Marlene. I love it.
Yeah, exactly. You keep coming. You say something, then you got to take it back. I like that.
You know, are you married?
I'm used to that.
Yeah, yes, okay. I just want to make sure you know.
Yeah, absolutely.
Does it matter to you if trading volumes come back in a big way? Do you even think about that stuff?
Well, I don't know. You know, it's quite a question. What does that mean in this world? What's real trading and what's
But there are some people who have had serious concerns about the American investor, the idea that baby boomers have been through a terrible 10-year period and some horror, and they're never getting back into stocks, and that younger people have been scared off by what they've seen, and that's going to kill equity prices for the next decade or two.
The marginal buyer, gone.
I don't think so. I think, maybe the marginal buyer, the young guy's buying. I think my son's just bought Apple and Google, which he's doing better than me than last month, I think. So This is upsetting me. But not really. But anyway, no, I think those people still interested in it. I mean, so I don't know. What's your viewership? How much is it up, down, sideways?
I would say in recent weeks, I've noticed in total viewers that it kind of is reflective of the weaker volume. Yeah. Mm-hmm. And that's out of all the things over 20 years having been here watching what correlates, the only thing that correlates with viewership, we can tighten up our teases and sit up straight and act like we're happy, and it does nothing. But if there's volume on the New York Stock Exchange, suddenly we're doing things right again on the show.
I think, look, either like we were talking about before, either the economy's going to start getting better or it's not, and the Fed's going to come in and then it's going to get better, or at least it's going to get, you'll get richer in some fashion. One of those things will make things start percolating. I'm the animal at the head of the pack.
You try.
Okay, I generally am.
Yeah.
And like I said, I either get eaten or I get the good grass. Okay, so my animal spirit, you guys talk about it, is awakened. Okay? My animal spirit's awakened. So
You're looking right at me saying that. Now I'm nervous. But
okay, no, I'm one of the first animals to have their spirit awakened. Now, am I sitting there running into the lion's pack? No, but I'm moving in, okay? So my spirit is awakened. So as if historically I can look behind me and I see, well, there's other animals following me. They don't necessarily follow me that fast. Sometimes there's no other animals around when we do things.
Yep.
Like in March.
Right.
In past times like that, we could see other animals around. Maybe there was a buffet tiger around or some other kind of tiger.
Does that make you a little nervous when you're out there?
That time in March, there was no buffet tiger because he had his own problems.
Does that make you nervous, though, to be looking right and left and see none of the rest of the pack following?
I don't give a shit, Sue.
You know,
one more.
yeah, go ahead.
You talk about the March trade being relatively easy, yes?
Yeah.
Is the one you're describing now, is it as easy or is it more clouded?
Look, it's not as easy in the near term because, you know, what we talked about before is, you know, the economy, I'm not sure which way it is right now. I think it's getting better. I'm not absolutely sure, okay? And if it's not getting better, the market can go down a little bit. What does that mean? You know, can it go down to 1,100? Sure it can. Can it go down to 1,000? No, I don't believe that. I mean, then it can. I'll tell you what, we'll be 100% equities.
Really?
You know, okay, maybe 90%
okay,
equities,
right.
okay? Like to keep some cash around.
What's that? There's another. I love your analogy with the grass and the lines. What's the other one? You go in and you get the beachfront. I'm not going to get the beachfront property when I buy, but I'm going to make sure that it doesn't get absolutely flooded, and then buy like 2 blocks over or something. A lot of people are more conservative. They'll follow you.
I was confused what the heck you just said.
No, you say you're there. Either the lion gets you because you're in the grasslands and there's no one else there. Either you get to feast on the grass or the lion gets to feast on you. The other expression is I'm not going to be in there and get the beachfront property when it goes on sale because that's the first thing that gets hit in South Carolina when the hurricane. But it's fascinating to hear all this stuff. But what's the biggest bad trade you made in the last 5 years?
5 of my career. I made a lot of bad ones.
Yeah, like how did it happen? What was the flaw in your thinking usually? Is it the same flaw typically?
Well, I mean, the worst trade we probably made was in
Becky has a series
98.
about this coming up.
Yes.
Maybe David.
All right, well,
should be in it.
98 was the worst trade we made. I think was Russia, and we thought that Russia would. They got an IMF deal, and we thought that Russia could default, but they shouldn't devalue. But they should devalue. I'm sorry, they should devalue, but not default. Okay, but they did both. So we kind of miscalculated that, and we were too long, and I couldn't get out of that trade.
What would you do that year in '98?
We were down.
Down.
I don't know, 20-some%.
Down 20-some%.
But what we did right away is once we recognized what was going on, we got out of all the rest of our. We couldn't sell Russia because no bid. We sold the rest of our emerging market. We sold down our junk portfolio, just to get the cash. So by September, that was a really funny year. By September, we were in cash. We actually had some leverage back then. We haven't had leverage probably in the last 3, 4, 5 years. And we were probably like 1.4. We're never a high leverage place. But we paid that. It was a funny thing. We had cash, and we were waiting for Deutsche Bank and some of these Merrill Lynch and some of these other guys to give us a call and ask for the money back that we owed them. But then we were so down their list of people with problems, we couldn't get the money back to them. They were so messed up in their back offices at the time. Now they're all a lot better now. Whether they are or not, I'm going to say that. They're all a lot better now, and so I don't think you'd have that same situation. But then it was very funny.